internal and external range liquidity. So this is how I use liquidity to make bias fucking easy. And every market moves exactly the same, from internal to external and from external to internal. In order to use that, we need to use time frame alignment. This is how I use it. If I look at the daily level, I want to look at the 1 hour structure away from that level. If I use the 4 hour level, I want to use the 30 or the 15-minute structure away from that level. If I use the 1 hour level, I want to use the 5-minute structure. 30-minute level is a 3-minute. That's in my entry. 15 minutes, for example, gap, I want to use a 1-minute structure. Difference between external and internal. Simple as fuck. Internal is fair value gaps. External is all highs and lows.
That makes sense.
Price always goes from internal to external and vice versa. From external to internal, internal, external. When internal is hit, that is your fair value gap, target external, all highs and lows. When external is hit, all highs and lows, you target the internal, which would be the fair value gap. Because the market is fractal, you can do it on all the time frames. So this is just a fucking rough representation of how the markets move. This is external liquidity. This is the low. We make a high. We go lower, make a lower low. This is your external. From sweeping this external, we come back up to, if this represents a fair value gap, to internal liquidity. And then from internal, we go back to the low that we left, which is external. This is a bearish example. You have external here. We make a new high. So this is also your external. We go back to the internal, which would be your fair value gap. Out of that fair value gap, we go back to the external. This is the daily time frame. This is this week. On the daily, this is NASDAQ. On the daily, we swept external, right? What do we target? We target internal, which is this gap. Once again, let me show you this once more. This is your daily, right? External, internal. This is the same chart on the 1 hour. This chart and this chart are the same. This high, external, is this high here. This is the previous daily high, which is right here. We sweep the previous day high. And what do we target? We target the internal. Time frame alignment tells you daily level, 1 hour structure. Daily level, daily, 1 hour structure, right? So what do? We sweep external. What do you target? You target internal, right?
Okay.
Now that same thing, I will show you on the 4 hour, because the markets are fractal. 4 hour alignment is the 30 minutes. This is once again the same chart. We sweep out the highs of the 4 hour. You hop on the 30 minutes. This is your 4 hour high, right? This is also your previous day high, right? On the 30 minutes, what do? We sweep the high, we start going lower. Once again, what do you target? From external, you can target also the external on the lower. External on the lower, this is an external range, right?
Yeah.
Because it's an old low, but that's external on the 30 minutes. On the daily, that is your previous day, that is your daily fair value gap, right?
Right.
Does that make sense?
Yes. Does to
right.
me.
So what do? We sweep the highs. Once again, we rip down lower to the fucking external. This is your external. This is swing low and this is a swing low, right? This is not a failure swing because the difference or the spacing between is pretty big, right? We sweep the low out. Where do we go? From internal, or my bad, from external, we go to internal, which would be this fair value gap. Why am I using the 30 minute? Because the 30 minute is aligned with the 4 hour. Does it make sense?
It does.
All right. We tap the internal. We kind of consolidate around here, right? So what happens after the internal is tapped? We what do we target? External, right? All right. Now once again, we close below the low, right? We sweep the low out. This is the only swing that you can target. What happens after we sweep the low? We come back into what? Into internal. External here, internal here. After tapping the internal here, what do? We sweep out the external here, right? We sweep out the external, come back to the internal. From this internal, we go back to the external on the 30 minutes. Why? Because the 4 hour is aligned with the 30 minutes. This is all together. This is your previous day high. This is your previous day low. This is external on the daily. This is internal on the daily. On the 30-minute, this is external and external. This is all that I said together. What do? We go up higher, we come back here and to our internal. From internal, we go to external, which is previous daily high. After sweeping the previous daily high, we have a big, so I cannot know what will happen after sweeping this high. I want to wait for the market to show me its hand. It shows me its hand with this big dump here on the 30-minute. After sweeping this low out, which is your external low, what do? Come back to internal. Now
okay. Quick thing, so because it swept that lower time frame external low, at that point you're then expecting it not to make higher all-time highs, but to come into the internal fair value gap.
Depends on what the higher time frame is telling me. This is just an example of how the markets move, and markets move in only one way. That is from external to internal and from internal to external. There is nothing else that the market does. Every single day, every single session, every single time the market is open, we're going from external to internal and vice versa. There's nothing else the market does. Now, that is a simplified way of how you can use that, and then I will introduce you to a lot of other things on how to implement it. Now, let me go back to this. We sweep down, we go down lower, sweep the low, come back higher into internal. From internal, we kind of consolidate, and we have an S&P here. I think I marked out YM 30-minute. This is NQ 30-minute. This high is this high. Now, you don't see the time because these are screenshots, so you've got to trust my word, or you can check the charts by yourself. This high never got swept. This high got swept on YM. Oh my God. So, yep, this high never got swept. It got swept. Push down lower. We sweep these lows out, and we sweep this low. We come back to internal. From internal, we go to external. That is, so YM, once again, introduce the S&P. Why am I using S&P here? Because on YM, that was the only swing high that we have in this whole range. This high is failure swing to this. Adam, is that correct? This high is a failure to this, kind of, right?
Mm-hmm.
Right? But on YM, that same high is the only high that you can use to trade out of. So when we create an S&P on that high, what do? We dump lower. Sweep the external, come back to internal. That's why this S&P is important, and this, for example, is not. Does it make sense?
Quick question.
You can ask.
Because we know, obviously, because we see the price action after the S&P was formed. But in hindsight, how would you know why, so NQ and ES didn't take out the high, but YM did. So in hindsight, how would you know, well, YM is lagging NQ and ES, or NQ and ES is lagging YM? Like, what I'm saying is, how do you know which YM versus ES, which one is the lagging?
Listen, well, that's a good question. I think you asked me that last time, and I told you, and I will tell you again, and ask a million times, and I don't know what it is about it. When we are inside of a range, after the S&P forms on an important high, I told you why this high is an important high, right? Because this is the only failure or the only swing high that can be swept. Where is this next swing high? This high and this high, which is really far away, right?
Right.
So we create that S&P. Now, if I don't have a clear bias, I want to see if we will react off of that S&P on the lower time frames. That is how I know, oh, this asset is lying and these other are not. If I have a pretty clear bias, if I'm one-sided on the higher time frame, if I'm really bearish on the higher time frame, for example, then I already know what asset is lying. Does it make sense?
So if it's after the S&T, if it just chopped around, it wouldn't be quote unquote telling on the other two. It's indecisive.
Exactly.
Okay, that I do remember you saying that now, and that sometimes repetition helps. So
exactly.
There's times where you have a super clear bias, and the SMT is more so a confluence. And then there's times where an SMT is kind of signal of like, hey, pay attention, let's see what happens here. And then
if I don't have a clear bias, I'm waiting to see how we will react off of the S&T.